Happy Friday, everyone. Welcome to Trading a Smaller Account. I'm Connie Hill. Happy that you have joined me here today. It's nice to see so many familiar names in the chat, and I love how you interact with each other. Today, we want to spend a little bit of time on showing you how you can set up multiple targets when you have a particular trade you have in mind. And maybe you have a first target you want the stock to get to, and then maybe a second target. We don't get to do too much of that in this class, but I've got a particular example I want to show you how you could possibly do this. Now, I am joined in the chat by James Boyd. James is having a busy morning. It's here with the early class right at the opening bell. He's actually going to be the next class, but he's going to help out in the chat. So if you have questions, go ahead, type those in. I'll try to catch your questions, but if I can't, then James will take those for me, or if they're a little bit maybe different topic, okay? So I'm glad that you're here. Now, if you're listening to this on the recording, and I know there are lots of you that do, when you have a question, go ahead and put it in the comments section in YouTube, because I go back and review those throughout the day, and that's how you get your questions answered quickly as well. Now, I hope you're following us on X. I'm Connie Hill CS. James is James Boyd CS. We'll post educational content out in our account, and it's free to follow. Go ahead, do so. Would love to have you along. Send you little tidbits during the day. All right, let's go through our disclosures. Options carry a high level of risk and are not suitable for all investors. We'll be using the Paper Money software application. It's provided for educational and informational purposes. Just looking at the chat, there's a little bit of feedback there. Hopefully that will clear up. For the sake of simplicity, when we present a trade, we're not going to go through any commissions or fees. Just know that there really will likely be some. Past performance is no guarantee of future results. All right. Typically in this class, we're going to take a look at what the market's doing, kind of get an idea of maybe what our posture should be. We're always going to be doing some example trades. I want to go through a couple of our existing trades, kind of get an idea of how do we manage this now that the trade is going, and then most of our time we're going to spend on putting on some new positions. All right. You think we need to get James talking longer or faster so he can get through more material? I tell you, James is a quick talker. I am not as quick of a talk as James is, but he can fly through a lot of material. Let's just start out here with our SPX. You guys know it's been on an uptrend, new high last week, ultimate high, came down. We had a couple of days of some pulling back activity last week, and then it just went down to about the 30, and since then it's just been kind of bouncing along. Yesterday we had another little bit of a pullback, but towards the end of the day, things started bouncing up off their lows, started creeping back up, and then we're seeing a little bit more follow through with that this morning. On the NASDAQ. Oh, interesting here. Now I had a little, you can see that line there that I had drawn. I was looking to maybe form a little triangle there. Looks like maybe it's breaking through this area. I had pegged this as a higher high, and the idea that we wanted the index to get beyond that angle. Looks like it's doing that today. And look at that, just brand new all-time high right there on the NASDAQ. So things are relatively bullish. Let's go to the VIX here. On our VIX, it's dropping today, which we would expect if the markets are up. Typically, that means the fear is down, right? So if the VIX is down, that indicator of fear with more put buying than call buying, then we'll see that indicator drop. And it's down, you know, it's already been in some areas that I'm going to say are fairly low. Right now, it looks like it's at 15.64. Earlier last week, when we had that little bit of a pullback in the market, it spiked up a little higher, went above 20. So we were starting to see a little bit of defensiveness in some positions, maybe some pulling things off if they were close to targets, things of that nature. But volatility is pulling back. So we're going to put on our bullish hat as we look at some examples here. Now, let me go back here. Let's talk about our class. We say in this class, we're going to work with a small balance, and a small balance to you may be different than it is to your neighbor. We're working with a $20,000 account. The maximum position size would be $5,000, and typically that would be with the ownership of a stock. More often than not, we're using options. We're going to risk $400 to $500 per trade, but that's it. That's going to make sure that we're identifying things on a short-term time frame as well as maybe into an intermediate type time frame. And we're going to be looking both bullish and bearish. Now, when we're looking bullish, these are the common strategies that we look at: buying the stock, long calls, short puts, buy right covered calls. We could also do legging and cover calls there as well. Short put verticals, long call verticals. When we're bearish, we're mainly going to focus on a few strategies: long puts, long put verticals, and short call verticals. Sometimes when the market's a little bit more neutral, we'll work on throwing in some calendars in there, some iron condors when we're in less trending conditions. But right now, it looks like we are trending. All right, let's jump back over to our thinkorswim. And first of all, let's take a look at a couple of our positions and what's going on with them. On Monday, we put on 2 trades on Broadcom. We talked about, should we do a short call or a long call vertical or a short put vertical? And as a class, we kind of decided we're going to do both of these and compare them. Now you can see here that this is the day we got in here on Monday. And what's the stock done? It's climbed a little bit, maybe a little bit sideways through here. So we wouldn't expect to be down on either position. Actually, we are up in each position, but just not a whole lot. They haven't done a ton for us yet. Okay. So our vertical, that's the long call vertical, we're up $45. The short put vertical, we're up $55. Now, when we started this, we had basically a smaller percent return that we were looking at for our put vertical than we were for our long call vertical. The one put, we sold actually for a pretty decent profit of $1.50. It's down to 95 cents. That's the right direction. We love what we're seeing there. We want to see that value decay. On the long call vertical, we need the stock to actually move. We want it to get beyond 300. Looks like now that it's like at 304. It was up a little higher than that today. So we're just going to let these guys work. The other one I want to bring up here is this one, HESAI. We're doing a short put on that trade. And we got in, I think this may have been last Friday. Let's check the date here. So the 18th, okay, a couple of Fridays ago. We sold a short put. We've only got 8 days before it expires. So this expires next Friday. So more likely than not, we want to find some kind of an exit point here. It's doing well for us. We collected $1.35. It went straight into our account. The value of that is eroded down to 25 cents. Let's take a quick look at the chart. And we can see what's been going on here. So this is the date we got in. It looked like it was bouncing off the 30-period moving average. It went up a little bit, then it pulled back a little bit. Last few days this week, it's been above our short strike price right there, which is the 20, the strike price of the put. Now, if we don't care if we're put the stock, we might just leave it alone. Okay, we might just say, oh, okay, we'll see what happens. If we get put the stock, we're happy to have the stock anyway, and we'll be getting it at a discount because we collected what? I think it was $1.35. Yeah, it was $1.35. If somebody says, it's time to be wrapping up this trade, and some traders will use this idea that we don't want to be in the option until the very last day, because if you've had this situation happen a time or two before, you get really leery that maybe you're sitting really nicely in a position like we are on this, and just one piece of bad news comes out, it tanks the stock and you don't have time to recover. Okay, so the other idea here is, well, let's just maybe give it a day or two longer and then let's get out. Okay, we are going to put in an order here to go buy it back if it gets down just a little bit further. Okay, we're going to take the risk off the table. We're going to lock in a majority of that 135 profit. So let's go put in here, create a closing order. We're just going to put in to buy it back. And right now it's saying we could buy it back for 30 cents. What if we just come down here and say, let's do it for 10 cents. Okay, we're not looking to get, whittle down into the pennies. Sometimes it doesn't work out that well. This stock trades a decent amount, but not a ton. It's not really in penny trading increment territory. If I show you this here on the options, you'll see most of them are ending in 5 cents, 10 cents, something like that. Okay, so let's put in a 10-cent here. We'll make it good till canceled. And then hopefully in the next day or two, the stock will run up to it. And let's see. Oh, I've got to change my order type. There we go. Just a single order here. Now it's going to let us confirm and send, and it'll send it into our trading a smaller account bucket. All right. I don't know if any of you have traded that strategy much, but it's helpful if we touch on it when it's appropriate, because in a smaller account, we could take ownership of 100 shares of stock. You know, we can afford to tie up, in this case, $22. We sold it for $20, right? So it would basically be $2,000 for 100 shares. That totally is within our limits to do so, okay? Our plan in this case is to get out early if we can. So that's what we're going to focus on. Let's see here. Let's go to the next one. Neiman, let's go, Newmont Mining, NEM. Let's just go to the chart on this one. I'll show you what happened. This one, a little bit interesting. Oh, come on, type in for me. All right, this one we took a different approach. We just bought a long call with it. This was in our, I think this was in our Monday class. We bought it for $3.05. We just did one contract, and we said, you know, we want just a 70% gain out of it. I shouldn't say just. We wanted a 70% gain out of it. So we put in an exit order that said if we get 70% better than that original cost of $3.05, go buy us back. And we put in a value of $5.30 there. Okay, that would be basically a 70% increase. So it moved really nicely for us. This day it continued to move, went up the next few days. In fact, it's still going up. Yesterday is when it hit that target. Let's go over to the monitor tab here real quickly on this trade. So we can see we bought it for $3.05. We put in our order to get out if it got up to $5.30. Would have been happy with that 70% return. It looks like it sold it for something much nicer than what we actually had. We did have a stop loss on this if it came down to 50% of what we paid for it. Didn't need it, so it canceled that side of the order. It filled us for something that was much more generous. Now, I want to point out that that is not super realistic. Paper money is excellent for us to practice with and practice strategies and rules and so forth. It doesn't always have perfect execution and everything, and sometimes we've seen that on our trades when they get filled. So this is saying it filled us for $7.35, which more likely than not, if it were in a real market, more likely than not, it probably would have been closer to what our target was there. Nonetheless, it filled us at $7.35. If that had been a live trade or actual data, it would have been 141% return. So I don't want you to have the idea that, oh yeah, man, things are going to get filled much nicer than what we expect. But the one thing I do want you to know here, see this time here? This got filled at 7:31 on the dot, okay? What happens when the market opens? Are prices just steady? No, they're jumping around, right? Stocks that have liquidity and a lot of activity on them, yeah, they're kind of jumping around. And so sometimes what happens is an order can get matched up with a market order, okay? And the market order gets executed at a higher price just because they're matching it up, okay? Somebody might have, I don't know that this is the case, but somebody could have said, I want to get filled at 7:35, or they were willing to sell it at 7:35, so it just matches us up with that person. But in a market order, it can get filled at any price, right? So if somebody just puts in a market order, yeah, it could go for 7:35, even though, okay, more likely, think more like the 5:30 amount. is going to be probably a little bit more realistic in a live account. Okay. All right. Those are our guys we've got to follow up with. All right. Ooh, I'm looking in the chat and it looks like a survey was just placed in it. And you guys know from time to time we'll do ask for your response in a survey. We always appreciate it when you take the time to fill it out. It's really short, two questions. Just fill in the radio button, plop, plop, you're done if you want to be. There's a couple of questions that we ask if you do want to give some feedback there. And I will also encourage you to use it as space to communicate something to me that maybe you might want to have hit on in our classes. Barb will be getting back pretty soon. If it's something for Barb, I can pass that information on to her as well. Okay. It could be something like, I'm struggling with this, or I really want to learn how to do this. You know, if it's something we can cover in our class, we love to do that. Okay. So use the survey for that opportunity. No, Barb, Calvin says, what happened to Barb? Is she gone? She is gone fixing her knee. Okay, she had to have a total knee replacement. And so it's intensive therapy that she's going through for 6 weeks after the surgery. So that's why I say she'll be back here in a couple more weeks, but she's just out getting her knee ready to go for the rest of her life. All right. You think maybe the order was somebody matching up to James's order after the bell buy stop? Maybe, right? When it's a market order, we don't even know what it's going to get matched with. It just fills you at kind of a price where it's just kind of matching up to contracts. All right. First one I want to spend some time on here is going to be our most complicated trade today. And it's going to be our most complicated because I want to show you how you can have a couple of targets in here. This is something that sometimes we'll focus on, but maybe not a whole lot. So I'm going to pull up a stock here, FCX, Freeport-McMoRan. Had been bullish earlier in the year, kind of pulled back here a little bit. Maybe was having a little bit of sideways resistance here, trying to break through. Looks like maybe it did that today. Sometimes the midpoint of a really long candle can act as resistance. So I was kind of eyeballing this earlier and saying, okay, in the body of this long candle, what looks like about midpoint? And I'm going to put it about there. And so I think this candle, at least so far today, is breaking through the midpoint of that large candle. So we're going to say we've got a breaking resistance type entry. Okay. Let's come on over to the options here, and we're going to look at September options. This has some liquidity in the weeklies, depending on what strike price you might be interested in. There's some liquidity, but there's also some smallness. And in this case, what we're going to do is we're going to be interested in buying a long 42 call. It's going to be our at the money strike price here. Okay. It's going to have a 54 delta. And look how skinny this spread is, you guys. This is something you should get excited about. You're like, ooh, 211 by 215, that's only 4 cents. How cool is that, right? 163 by 168, only 5 cents difference. This is what a trader loves to see, that kind of liquidity. So when we're telling you, look for lots of open interest, this is the type of thing that it could possibly do. Okay, so target on this, I put in a couple of targets, not based on technical analysis, but more based on percentage gain in the price of the option. Now on this one, we do want to put on a stop loss here. And I was kind of thinking, you know, if it were to go down below it where its low is today, then it's probably not really breaking through. So we could either use this, you know, below this 40.57 line, we could go to the low point on the day. So we're just going to go barely on the other side of this 40.57 line. And I was looking to do here about, what did I put down here? Let's go 10 cents lower than 40.57. Let's go 40.47. Okay, let's go with that number for our stop. All right. Now let's roll this out how we might do 2 targets here. So let's go ahead we're going to have to buy multiple contracts. And I needed a stock that was lower priced to fit the constraints of our account, that we don't want to risk more than $500 at any trade. And so we can do 2 contracts here, and our theoretical loss would still keep us under $500, right? It would be $424. So we'll do 2 contracts here. Now I'm going to change the bottom order here, and then the rest of it we're going to build manually. And we're going to put in a first triggers 2 OCO orders so that we can have 2 targets, okay? And so as we build this, I'm going to do 2 opposite orders here. So create opposite order, and then we're going to modify these, and then we're going to build after that. So for the first target, let's use this first area here. Let's suppose, and this is what I was looking at here initially, looking for an 80% gain on the price of this option, regardless of when it does it. If it does it tomorrow, if it does it Monday, well, tomorrow's Saturday, so it won't do it tomorrow, right? But regardless of when it does it, we're not going to put a date on it, but it's kind of like, if we get that percentage gain, would 80% be a nice thing to have in a smaller account to help it grow? Absolutely, okay? So we're going to come over here to our calculator, and we're going to say, all right, what would be 212 times 1.8? We've got to do it the 1, so it's at least $2.12. Then the 0.8 is that 80%. That says, okay, we're going to look to get out on the first target at 381. Okay, so we're going to put that in, 0.81. The next order is going to be our stop order. Okay, so on our stop order, we're going to come down here. We're going to change this to a market order. And we're going to put a condition on it. We're going to use the price of the stock that I wrote over here. If you're not seeing that, let me collapse the calculator to $40.47 is where that stop is. Okay, so we are going to make this bottom order, even though it's a market order, we're going to make it be our stop. It's going to be conditional. And one thing I need to change here is we only want 1 contract here and 1 contract here. Okay, and then we're going to hit the gear. We're going to say, all right, if FCX gets lower than or equal to $40.47, we want to be out. Let's go here, 40.47. There we go. Then we're saying if it goes that low, trigger a market order, get us out of the trade. Okay. We're going to make this good till canceled. And that's going to be the first part of the order. We're going to duplicate these and change the conditions. So we're going to do 1 order here. We're going to say create duplicate order. And on this stop loss that we just configured, we're going to say create duplicate order. Then we're going to change it. So this first one, this 381, we had a target in there for 80%. Now, these numbers, they don't have to be 80%. It could be 50%. It could be 30%. It could be whatever number you want, okay? I wanted to give it a little bit of time to move. That's also why we did 42 days out, is a little bit of time to move so we don't run into time decay issues, with the expectation that, you know, hopefully we'll be out. I don't know if we'll be out by next Friday, but maybe we'll be out of the first target by next Friday. I don't think it'll happen on Monday, but we'll see, right? So here, what if we were to go for, I'm not going to say greedy, but more a little greedy. Okay, not greedy, but hefty. Okay, let's go with hefty. So the first one is at 80%. What if we were to go just a little bit further? Okay, on this next one, let's go to the calculator. So we're going to say, look for our 212. We're going to multiply this by, we're going to go 1.10. That would be 210%. Oh, I've got to make it to 2, not a 1. 2.1. Let me redo that math here. I think I may have done that wrong. 212 times 2.1. So that would be 210%. Okay. The value of the option, That says, okay, we did the calculation right the first time. Just want to double check on it. 4.45 is what we're going to put on that second order. And then on this one, we've got to change it to a market order here. And really what I should have done here, and maybe I will, let me just delete this. What I should have done is just copied this one. I accidentally copied the 381 line. Let's copy this line that has already our stop in it, okay? So we're gonna say create duplicate order, puts it in as a market. Let's go make sure the conditions are in there that are appropriate. Yep, it goes down to 40.47. We need to be out of it, okay? Check your verbiage down there, make sure it says less than or equal to. Okay, so our stop, we have to put it in both spots. Now, could we change our stop after the fact? Absolutely. We could change our stop. What if maybe the stock started moving towards the target and you're like, great, we're up significantly in the trade. Let's maybe move it up to a break even. Move it or to the, say, a price of where the stock, where you think, yeah, let's maybe go 10 cents below the low of the day. And 10 cents below the low of the day, something like that. You could definitely do that, but remember, you're going to have to change it, and the person that's tracking it is going to have to change it and be really active with it and updating those orders. But let's leave our target orders in place, but we're going to keep the idea that, yeah, if we want to adjust our stop loss and cinch it up, we're going to do that. Susie says, you know, how do you find the conditions? What you do, you come over here to this little gear. And when you first put on your order, you don't see the little gear. You have to come and put your mouse here, and then it brings up the gear. Okay, so here's the gear on the first one where we said, let's do it if FCX gets lower at or lower than 40.47, then just trigger a market order. It's time for us to be out. Okay, so that's how you get to it. All right, any questions on this? How many of you have used this kind of an order before? How many of you have used one of these first triggers 2 OCOs before? It's probably not something we've had a lot of opportunity to do a lot of in our class at this point, but it's something that I think is entirely appropriate that you know how to do. Let me see here. So we hit, how do you get to those conditions? Yeah, it's got some good volume here. RTR says, hey, this thing has some good volume. John says, you know, create the duplicate order equals the unlimited nuances without apparent limitations. Yeah, you can make this do it however it makes sense to you to do on any trade you're looking at. Now, if you're copying these trades in your paper money account, which I encourage you to do, when James is teaching a class, he encourages you to do the paper trades, these example trades in your paper account, so that you can learn these skills. You're going to learn a lot better if you're the person actually doing it in your paper account than just kind of sitting on the sofa and kicking back, watching what we're doing, right? It'll really become ingrained in you a lot more quickly. Okay, Frank, you haven't done it before. Kevin says maybe not so much. Jack hasn't do it. Lola says, hey, this 2 OCO order thing is new. Great. I like it when I teach you something new, right? Now, if you only have one contract, can you still do the OCO order? Great question, Chukwuma. You could still do that OCO order, but you'd have to have more than one contract to be able to do the second part. These two lines here are really what are considered the second OCO order. I mean, you could do the first one and say, all right, first one, if you hit our target at 381, great. If you hit the price of the stock down at 40.47, great. Not so great. We don't want it to stop us out, but if it did, it did, right? And it would cancel the other order for us. But you have to have something you can split in order to be able to put on the second condition here. All right. Stephen says, you know, should you change all X's to GTC? Well, absolutely. Thank you. I was a little neglectful. I'm glad I haven't sent that on yet. Yeah, there goes our GTCs. Thank you so much. I would eventually notice that, maybe, Well, hopefully I would have noticed that. Appreciate you bringing it up, because absolutely, yes. Every single one of those orders needs to be GTC. Frank says, so if the price goes up, one option will sell at one price and the second at a higher price if it goes there. Now, suppose we hit our first target. We're like, nice, we got 80% on that first contract. But then what if, say, let's go out to the chart. What if FCX maybe comes up to, maybe say this area? I could see maybe this, oops, let's try this again, line. This could be another line of point of resistance for the stock, right? It had a bounce down off of here, bounced over here, bounced back down before it pushed its way through. Now, I don't know, maybe it would have hit its, target based on looking for 210% gain on the 212 option. But if not, say it comes up here and it hasn't hit that second order yet, and you're like, oh man, that could roll over. Maybe it's hit its head on it 2 days in a row or something. You might just go in and say, all right, let's just take what we have. If it's 80%, like the other contract was, great. If it's 85% or 90% or whatever it might be, yeah, you can go in and change that order, especially if you have an idea, I think this might be out of the run, the juice, the momentum. It's made a nice big run for us, and maybe it's starting to peter out. So absolutely, you can be very active with those prices. Betty says, well, how do I find this in my account? So Betty, if we come back to the trade tab, we kind of build it from scratch, okay? But let me put, let's put a box around this, okay? Down here, the lower right underneath our contracts, when we just put in one order, usually this just says single order, okay? But I went to the pick list and I chose first triggers 2 OCO orders. Now you can get real creative. You can go 3 OCO orders. Okay, we're just doing 2. 2 suits our purpose here today. Okay, so that's how you find it. It should be in your paper account. All right, this is my demonstration account. That's kind of a hybrid paper account. Let's see what else. Could you use a trailing stop on the exits? You could if you wanted, Harry. If you've had some success using trailing stops on options and you've thought, yeah, I want to do it this way, absolutely you could. You don't have to do it exactly the way I'm showing you. I'm just giving you an example of how you could do it, how some traders might think through it, right? But say it hits our 80% order first and locks in that profit. And then say you want to be like Harry. Maybe Harry says, let's put a trailing stop on it now. Right now it's at, let's say it's at 350 or something. Okay. No, we would want it bigger than 380. Say it gets up to $4. I know our numbers are floating around here a little bit. I should have locked them in. Well, it's changed a little bit here. I'm just going to lock it in there. You could change this order type. Okay, you could change it in your working orders, and you could, when you bring it up, let me go ahead and send it through here, okay? And let's put this in our trading a smaller account. We might have to pay a couple cents more. That's all right, we can deal with it. Oh, build this a little cheaper, 210, awesome, we'll take it. So once you have that position, suppose you did want to change that, Harry, and you could come in here into your working orders, and suppose you only had one of them left. You could come out here and find which one is the stop. So the one that's with a market is the one that's really a stop for us. It has conditions. Yeah, you could come in and change it to be a stop loss of any sort. Could be trailing, could be whatever you want it to be. Okay. Oh, Betty says, no, how do I get to my screen? Oh, you want to hop on with me, Betty? I don't know how to do that. I mean, James is pretty smart. Maybe James has something in place. Nah, we don't, right? Danielle, this question to JB, I'm going to let JB handle it. Okay, I think we're good. We answered all of your questions here. I sure hope so. Let's get on some additional positions. Shashi says, could you do this one more time? I wasn't planning to, but sure. I'll change my plan. Okay, we'll change the plan. And I'm going to be drawing some numbers out of the air. Okay, let's do it with another stock, but it's got to be a smaller stock so that we can afford to do a single option. And actually, we're not going to be able to. My other examples don't really fit our rules. For a smaller price stock, that those options are lower price, so they're less than $500. Actually, we need them to be lower than $2.50 so we can do multiple contracts. Okay, what you might have to do is go back once this is posted. Okay, go back and review it yourself, and you can pause every single time I do a step. Pause, pause, pause. Okay. All right. Next up, and I'm glad that was new for some of you, and you can envision how you might be able to use that. Let's look at this Unity software. Unity software, that's not looking as good as it was. Let's go for a different one. Let's go for Lennar. This one's kind of an interesting one here. If it was a cheaper stock, we might go for a single option on this one. What have we got going on here? Well, this is a home builder stock. Some of the home builders happen to be doing not too bad. Okay. If we looked at this, we looked at this earlier for possibly a different class. We did a trade on this, but see these white lines? I drew out here what's called an ascending triangle. Now, on an ascending triangle, we took the third entry, which is basically a bounce off this lower support level if there's enough room to run up. The first entry typically is going to be on the breakout. Okay, so it did have the breakout earlier this week. Then it just kind of dawdled a little bit. It looked to me earlier when it was kind of up here at the higher end of its shadow that it looked like it was like maybe flagging sideways and starting to break out of the sideways flag. Okay, might not be as convincing right now, but we're going to go ahead with it. All right. On a long call vertical, we might set it up a little bit more aggressively than we might do a short put vertical. Okay. If we wanted to trade this pattern, that's what I wanted to show you, would go to the second touch in our triangle. So down here is the first touch of the triangle. Here is the second touch of the triangle. And so I'll go to that point. I'll come all the way down to the diagonal line so that we can get the height of the triangle. We could say duplicate the drawing, come on, activate the drawing, trend line 2, there we go. We're going to click and drag it. We're going to put it on our breakout zone, and that gives us a pretty big target. This is a pretty tall triangle. And it took a while to develop, so we would expect it probably taking a while to get to that kind of a target. If the options were maybe a little bit less expensive, we might try to do something like that. But I don't think we can do that in our account. Okay. We're going to go out to these September options. I think that's what we're going to use here. Yep, the September 19s. And our lowest price option here is $750. We can't risk more than $500 in our account. So we've got to do some sort of vertical. Now, the implied volatility is not super high. So in this case, I'm thinking we've got a bigger target. Let's go for maybe something where we require the stock to move somewhat. And let's go for a 120, 125 long call vertical. Okay, so we're going to say buy vertical. And great. We're willing to risk 230 to make what? 5 minus our debit, which is going to be 270. Okay, if we get 270, 275 now, divided by 2.25, that's 122%. So that's what I'm saying, it's fairly healthy, right? Versus, maybe say a 50% return, which I'm not knocking a 50% return. I'm just saying we've got a big target on it. Yeah, let's structure a trade that might be a little bit more aggressive. And I am going to lock that in. Okay. We can do 2 contracts. Awesome. We're going to do 2 contracts here. We'll do our typical first trigger sequential. We'll do create opposite order. And we're going to put in a target. We're just going to put in one target here, that if we get a chunk of our 122% of the gain, we could be satisfied with it and hop out of the trade. Okay, we don't need to bleed every penny off of this. What if we get, in this case, would you be happy at 70% of it, 75, 80% of it? You could decide what that's going to be for you. So let's go 225. I'm going to do the math the long way, okay? 225 times 70%, okay? Times 0.7. I need to redo that. We want to do that times our gain. So our max theoretical gain is 275. We want to multiply it by, just going to go, let me clear it out, Connie. Let's do it one more time. 2.25 or 2.75 is what we have to gain. Need my keyboard out a little higher so it doesn't knock that. 2.75 times 0.7 gives us a value of $1.19, or $1.92 rather, $1.92, and we're going to add that to our 2.25. That's going to give us a value. Whatever that value is, that's what we're going to buy it back for, or sell it for. So we're going to say 192 plus 2.25 equals 433. So we'll put in 433 here. We're going to make it a limit order. We'll leave it a limit order. We'll put it as a GTC. We don't know if or when that might occur, but we're going to say software, take care of us. We don't want to babysit. You could be out watching James's class or walking your dog or getting an ice cream cone or whatever, doing something else than staring at your computer. Just let the software take care of it. We're going to submit that into that account. All right. I'll make sure we get filled on that. It didn't fill immediately, but I'll make sure it gets filled here in the next couple of minutes. But a couple of things to remind you of. James has posted the survey down in the bottom. If you do that survey for us, as coaches, we really appreciate it when you take the time to do that. And it looks like we just got filled on that. Awesome. I hope you're subscribed to our Trader Talks channel. This is where you can see what's coming up. This is where you can see the archive classes. Once this is posted, you would come out here to trading a smaller account, which is go down 7 rows. And trading a smaller account is right here. So look for Ben's face, Cameron's face, then my face. Okay. Trading a smaller account. If you need to go back to the beginning of the lesson to see how we structured those 5 orders, that'll do it for you. Okay, so just go back there. But it just makes it easy to find our content. So make sure you're a subscriber. Make sure you're following James and I. Please, if you have the opportunity here to do the survey, we always appreciate you taking the time to fill that out for us. I'll read everything you write. All right, our managers read everything you write. We want your feedback. We want to know, and additionally, if there's things you want to communicate, like I'm really interested in X, or I'm having a problem with X, go ahead, use that space to communicate that to me. I like to incorporate those types of things into my classes. And those are things that you're struggling with or things that you want to know. All right, you guys, my time is up. Appreciate you being here today. We're going to have a little pause so James can go get ready. He's probably got to jump off the chat here really quick so that he can get ready. He'll be up next. And his class is Trading Technical Indicators. So very much tech-based technicals in terms of analyzing the chart. So we'll see you there. I'm actually going to jump over. I'll be doing the chat in his class. So we'll see you there in about 15 minutes or so. Bye-bye.